Good day, colleagues. Um, Good day, everyone. I'm David Berno, Remittance and Inclusive Digital Finance Officer at the International Fund for Agriculture Development. I work with the Financing Facility for Remittances, FFR, whose mandate is to support innovation and policy engagement in the remittance space towards cost reduction, financial inclusion, and digitalization. We have operated since 2006 through programs of TA and grants. The FFR is currently active in 7 African countries through the Prime Africa initiative, 15 million initiative co-funded by the European Union. Today's session is hosted by the National Remittance Stakeholder Network, Community of Practice of Kenya and Uganda. You can get more information regarding the FFR work in Africa and globally at our website, ffremittances.org. In today's discussion, we'll put together good practices on how to onboard working customers, remittance working customers into fully fledged banking customers. Remittance receivers can benefit all suite of financial services a bank can offer. And for the bank is a good way to mobilize additional deposits, cross-selling and developing new series of financial services for the targeted segment, which have not receiving so far too much attention. So welcome to this session. And before presenting my amazing panelists, let me give you a brief housekeeping rules. The session is supposed to be very interactive, so please post your question on the Q&A on the bottom hand. You will see an icon, and also you can post your comments and contribution to the chat. The recording is in progress and will be shared after the webinar jointly with the panelist presentation. All right, so all is set. Without further ado, let me introduce you Anastasia Gunjiri. She's an impact investment professional currently working at an associate at iGravity, where she leads program coordination for the Impact Linked Fund for Gender Inclusive FinTech. She works to advance financial inclusion for women migrants and their families, leveraging the Impact Linked Finance to expand access to formal financial services. Her work also explore remittances as an entry point for financial inclusion. Anastasia, welcome, and over to you. Thank you.
Thank you, David, and hello, everyone. I'm excited to contribute to our discussion today and share more about our work at iGravity, specifically the Impact Linked Fund for Gender Inclusive FinTech, and how we are accelerating the use of remittances as an entry point for women's financial inclusion. So perhaps we can have the slides on. Super. Maybe for those who don't know, iGravity, I'd like to briefly introduce what we do. In the next slide, iGravity is a specialized impact investment and advisory firm, and we work, a lot of our work seeks to create and scale impact, and this is done through 2 different arms. So one side, we have the advisory services, where we help different development partners to build and develop innovative finance mechanisms and impact management systems. And on the other side, we also manage several investment facilities across different thematic and geographical areas. Some of the areas that we cover through the different facilities include rural livelihoods, refugees, and education. And it is within this investment mandate where we have the Impact Linked Fund for Gender Inclusive FinTech, or simply ILF for GIF, as I will refer to, where we are getting to do a lot of work on financial inclusion, specifically for women. And on the next slide, and before I talk about the ILF for GIF and what we do, I'd be curious to know how many of us have heard of Impact Linked Finance. So we'll share some details in the chat in terms of how you can be able to access the poll. So you can either scan the QR code that's being displayed, and it will take you directly to the question, or alternatively, go to menti.com and put in the code that's shown, and it should take you directly to the question. Thank you. So I'll just give us a few seconds to respond to the poll. We can proceed to the next slide. So maybe for those who don't know impact-linked finance and how it works, it's a financing model that seeks to address one specific challenge. And this is that most enterprises create a lot of social value through their solutions, but they hardly get the recognition or rewarded for this value they create. And the risk of this is that as these businesses scale, they can easily shift from their focus. And a lot of times there's a tension now between the financial growth of the company and the scaling of the impact. So here, in order to address this challenge, we use impact-linked finance to use financial incentives and tying them to specific social impact, which would enable the companies to receive specific financial benefits when they achieve the set KPIs. And so in the end, by linking these financial rewards to specific social impact, impact-linked finance enhances social economic development of typically underserved markets, while at the same time strengthening the sustainability of these enterprises. And to put this into more perspective, looking at the next slide, where we do our work as the ILF for GIF, our work mostly focuses on three thematic areas: gender, migration, and financial inclusion. And as we know, we have a significant number of migrants globally. Here we're looking at over 200 million. And more, we're also seeing additional opportunity where we are having significant remittance flows, especially in low and middle income countries. And this is even surpassing official development assistance, foreign direct investments. But on the other side, we also have a challenge where so many women are still relying on informal financial mechanisms. And as we know, this comes at a high risk. So in order to address this, ILF4GIF seeks to provide impact-linked finance in the form of outcome-based grants and technical support to financial service providers in order to incentivize them to strengthen their focus on gender outcomes, specifically for financial inclusion. And if we go to the next slide, we have an illustration of how this works. So we have different partners that are involved. So on one side, ILF4GIF offers financial support for these FSPs, and this is usually through direct funding to these fintechs, where we agree on specific impact KPIs, and when they are achieved, the funding is disbursed. On the other side, we also partner with impact investor partners. As you can see on the left, we have several partners who also additionally invest in these companies. However, beyond the financial support that these fintechs receive, we also offer what we call the ecosystem enabling support, which is what we're seeing on the right side of the illustration. And I'll give a little more detail in the next slide about how this works. But here we do partner with different organizations such as Women's World Banking, and we'll be hearing a little bit more about that. We've partnered with Village Capital and Seedstars by firms where FSPs are supported migrant women. And the purpose of this dual approach, financial and technical support, is based on some challenges that we identified in the ecosystem. So a lot of FSPs are not able to fully serve these migrant women because there's limited know-how and support that's needed to serve these migrants. And also, while this market is large, there's still limited incentives for these FSPs to to reach these women or to scale their reach in areas where they're already operating. And lastly, which is also super crucial, is that there's limited data. And as we know, it's important, especially in this scenario, to have data, all the relevant information needed in order to understand the needs of the market, to understand behaviors, interests of these women. And therefore, when there are limited impact measurement and management systems, then it's difficult for the FSPs to have an understanding of the viability of the market. So to address these specific challenges, we work with ecosystem enablers, which are organizations that have rich expertise to guide these different financial service providers. And here, the kind of expertise, as we'll see in the next slide, the kind of expertise that this ecosystem enablers offer vary. So for instance, they can help them design gender strategies. They can help them to set up impact measurement and management systems in order to be able to better understand the market and the needs. And it's also important to note here is that through this implementation of these programs, we do have impact-linked payments where we get to disburse or pay the partners or the FSPs once specific needs have been met. So for the work that we've done, briefly, the work we've done with Village Capital and Seedstars has been running accelerator programs where we directly work with fintechs, early to growth stage fintechs. As we've seen here, we have worked with more than 60 fintechs across different geographies in Sub-Saharan Africa, Middle East, North Africa, and Asia. And here they receive this kind of support to make them more investment ready to serve these migrant women. And on the other side, we've also run incubation programs with Women's World Banking, where they directly work with FSPs to support them better serve these migrants. And here we run programs in Nigeria, Cambodia, and Indonesia. So some of the results that we've been able to achieve so far through the different fintechs that we've supported is that we've reached more than 200,000 migrant women through different financial solutions, including loans, savings, insurances, payments. Some of them also offer remittances, but we're also seeing a lot of use cases for remittances, and this is how some of these women get to access these financial solutions. There's also been significant growth. And in addition to that, we've seen the fintechs that we've supported raising additional investment over two solutions. And the rate side of things, I'll not speak a lot on the incubator. We'll be hearing that in detail. And I think with that, then I'll pause here. But this basically sums up the work that we've done over time and the rationale behind what we do.
Thank you so much, Anastasia. We'll definitely come back at a later stage for some question. Maybe in the meantime, you can fix some minor problem of connectivity. There was a minor elements, so just check it out if you can change connection for the Q&A. Thank you again for the presentation and to give the context of your intervention. I think it's very important what you mentioned, the blended approach to support fintech and financial service provider to go to deep dive into the product development for women and for other vulnerable group with TA and funding approach. We'll definitely be interested to know more. But for interest of time, let me move ahead with the next presenters. Let me introduce you Olojumake Daramola from Women World Banking. She serves as a specialist in the advisory service Africa. In her role, she's responsible for designing and replicating women-centered solutions and products aimed at enhancing financial inclusion for low-income women. She brings over 12 years of experience in the financial service industry, having held various positions. Prior to joining Women World Banking, Jomuke was product manager for microfinance banks and other financial institutions at Sterling Banks. With said that, I'll invite Jomuke to take the floor and walk us into our presentation. Thank you.
Thank you so much, David, for the warm welcome and introduction, and good afternoon to everyone on the call today. You can have the slides up. Thank you, Vala. So today we'll be talking about remittances, a pathway for financial inclusion, focusing majorly on the work we did here in Nigeria. Next slide, please. And as we go on, I'll start with a brief introduction of Women's World Banking, just to be sure that you know who we are and what we do. Next slide. So who are we? Women's World Banking, we're a not-for-profit organization, and we work with financial institutions to demonstrate the benefit of investing in women. And our mission is to expand economic assets and participation for low-income women and their households, to help them have access to financial services, knowledge, and markets. And we've been doing this for 45 years, and we have 74 financial service providers in our network, spanning in over 35 countries, and we've reached 185 million women. Next slide. So bringing it home, what does it look like in Africa? So the opportunity in Africa is wide and vast. That presents a huge untapped opportunity for financial service providers, given the level of underserved population. Then there is an opportunity for us to reach 386 million women in sub-Saharan Africa. Imagine providing financial services such as savings, credit, and insurance to this segment of women that lack access to formal financial services. Studies have shown that 6 in 10 informal small businesses in Africa are owned by women, yet 70% of them lack access to adequate finance. Studies also show that women spend 90% of their income. They put it back into their families and their communities. So that means when you empower a woman, you empower a nation. In view of this, our goal in Africa is to build economic empowerment and resilience for 15 million women at the minimum. Next slide. The next slide then speaks to how do we intend to achieve this, or how does our organization plan to reach, or have we reached the women in the past? So we do this by focusing on the economic growth for women through productive credits, then preferring resilience products or solutions for women, either through insurance, climate resilience, savings, pension, and remittances. How is this done? We do this by partnering with policymakers and regulators, also providing advisory services to financial service providers in terms of product or solution development to ensure that it meets the women's needs. We also invest capital to influence financial service providers to better serve women. And in terms of outcome, both short and long. And the short term, we want to ensure that the women have a choice to access, and not just access, but usage of financial services. Then in the long run, this leads to economic empowerment and stability for the women. Next slide. We're now going to be going to the solution overview. What was the work we did as regards to remittances in Nigeria? We'll start by what were we trying to solve for? In Nigeria, many low-income women receive their remittances at the bank over the counter. So these transactions are often isolated. So it's just give and take. I'm here to collect my remittance, pick up my remittance, and they go. That is all. No other financial service is preferred to these women. So they remain outside the formal financial system, lacking access to other financial services or products that will be beneficial to them. And we feel that the absence of this tailored financial and digital capability further increases the exclusion and limits them to be effectively empowered with the use of financial services. So that was the problem we tried to solve for using the women recipients of remittances. Next slide. And to solve for this problem, we used our women-centered design methodology, which is proprietary to Women's World Banking. And it is done in 5 phases, which is define, diagnose, design, pilot, and scale, which helps you go through the process of understanding the problem, then seeking to know what brings the problem. Why is this problem happening? From the point of view of the woman, which is what we call the diagnose. We look at it from the point of view of the woman and the organization. Then we take insights from this phase to design a solution. Through a co-creation workshop, we have ideation sessions, prioritization sessions, ensuring that whatever solutions that we are putting forward effectively covers the problems that have been identified as to why the women are not behaving in the way we need them to behave. Those solutions are then moved to a pilot phase where we test what solutions and products we've developed with a small sample size to see how it's going to work in the real life and make necessary adjustments before we scale. Next slide. So for this project, what did we do? We now know the problem statements. So what do we want to happen? Hence the project objective. The objective is to reach low-income women recipients in Nigeria and migrate them from being purely transactional clients and then benefiting from a relationship-based banking with access to asset and liability products. That means they will have access to savings products, they will have access to credit products, insurance products. Secondly, we would incorporate digital and financial capability components to ensure that these women can easily access and use financial services. So the challenge we're solving for is not just access, but to improve usage. And the design principles we use to design these components is 1, increase awareness, build digital financial capabilities through learning by doing, and also encourage retention. Next slide. So next slide, please. So we've seen the problem statement, which is what we're trying to solve. We've seen the end goal. We're now going to discuss the how. So some of the insights we got before designing the solution for this, when we spoke to the remittance recipients, when we spoke to these women, is that high bank ownership does not equal to deep engagement. That means most people have accounts, but they are not effectively or efficiently using it. So they might open the accounts to facilitate access to funds, but that's the only thing they do. They do not engage further with these accounts. Secondly, basic needs takes priority, but do they have surplus? Yes. And remember at the start of my presentation, I said they spend 90% of their income on family and community. So women tend to prioritize immediate household needs, but there's still some that they can save. Another thing we found out is that informal services remain attractive than formal bank offerings. That means they will rather save with their local corporation, they will rather cooperative rather, they will rather save with thrift collectors than put their money in the bank, because they are probably more comfortable with these informal institutions than the formal ones. Next one. Other insights such as limited awareness to banking services, digital readiness exists, but is underutilized. I'd like to speak on that. These women have smartphones, but all they use their smartphones for is very limited. So just calls, maybe WhatsApp, maybe some Facebook, because of their kids helping them. Apart from that, they are still not comfortable doing financial transactions on their phones, and it is possible. Okay, so I've spoken about the relationship being purely transactional. So still they go in, take their money and leave, nothing more. So what solution? How do we correct this? Next slide, please. So okay, before I talk about how we correct it, let me talk about the user persona. So based on this internet, you'll be able to put together what our user looks like, or our intended user, what she does, who influences her. And this is what the women-centered design methodology does. It brings the user alive. So you know we are designing the solution for. She's influenced by a community. She has monthly income of 50,000 Naira. That is circa 32 USD. Yes, 32 USD. And this money includes, that's what she makes monthly, and includes remittance she receives from her brothers. So from those insights, you'll be able to paint a picture of who we are designing this solution for. She's time poor. When she gets her money, she goes to the Access Bank branch close to her shop to collect the money so she can use. So what did we design? Next slide.
Jumoke, just to
Yes?
remind that we have 2 minutes to conclude. Thank you.
Okay, so we designed the solutions across awareness activation using materials that the women are comfortable with. We're also able to put in incentives that she would like. So I'll show you how Access Bank utilize this concept and what results they had. Next slide, please. So in terms of adaptation of the solution components, for awareness, Access Bank used in-branch posters and handbills to promote the campaign in the participating branches. They also utilized digital channels, especially bulk SMS to women recipients, telling them about the solution. Then in-person marketing in the banking hall. So when they are there, they call them product champions. They walk up to these women and tell them what they can do more with the bank. But it has to have a hook. This is where activation comes in. And Access Bank used their Diamond Extra product as the hook. So this product allows them to build a savings culture, and they are rewarded for savings. The product champions then help them to onboard, and they're able to do it on their own. So in terms of rewards, what rewards they put in place? So these women were rewarded for saving. So there were raffles, draws, there were incentives on initial bonuses on initial deposits into their account, things to keep them to ensure that they come back. So you get rewarded. The more you save, the more you have an opportunity to win, the more you have access to trainings. So things like that encourage the women to open these accounts. And in 6 months, we had these following results. Please, next slide. In 6 months, Access Bank, they were able to reach over 40,000 women, and over 8,500 Diamond Extra accounts were opened, and they were able to achieve 95% of our KPI. And I would like to say that this 95% achievement is because it was not even open to all Access Bank branches. It was a phased rollout. So imagine it's open to, there are over 500 branches. The numbers would have been more than this. So there is always an opportunity to serve women. There is always an opportunity to bring more women into the fold. It's a business opportunity, and you can't lose by 7 women. You will always gain more. Thank you very much. David, thank you.
Thank you so much, Jumoke, for the fantastic presentation. And I think it's a clear testament that working for women financial inclusion is profitable, is successful. It's just a matter to be intentional, I believe. So we'll definitely have a second round with the Q&A, but let me move ahead with the next panelist, a dear colleague, one of the grantees of the FFR Prime Africa, Daniel Madara, who lead the digital special project at Credit Bank. So Daniel, over to you for your presentation.
Thank you, David, and thank you for the introduction. Thank you for with the fellow panelists who went before me. So thank you. Maybe we can have the presentation. Thank you for this. So just to be able to give a context, as Credit Bank, we are part of the grantees for one of the partnerships that we are doing with IFAD, together with some other partners, but we were able to get a grant to be able to facilitate remittances. And these are basically affordable remittances and enhanced financial inclusion to rural families in Kenya. And this is something that we started in 2022. So just to be able to give you a brief of Credit Bank for the ones who do not know about Credit Bank, we can be able to head to the next slide. So Credit Bank is a licensed commercial bank with a network of 16 branches and serving over 50,000 customers across Kenya and the diaspora. And just to be able to foster financial inclusion and particularly extend our outreach beyond our physical presence, the bank has heavily invested in a robust digital services delivery infrastructure. And with this investment and complemented by well-trained and highly specialized staff, we are able to support our customers and partners to carry out seamless transactions. And this is 24/7 and across borders. And one of the things as a bank, we are focused on enhancing financial inclusion for both excluded and underbanked SMEs and individuals, and which includes women and the youth. And the bank builds partnerships to increase outreach and extend financial services to customers in locations it doesn't have a presence. And one such partnership is with SACCOs. So one of the things that we are keen on is that with our branch presence, it is very evident that we cannot be able to be in many locations, especially rural locations. So one of the things that we have done is we've leveraged on digital infrastructure and also with partnerships or with partners. So one of the things that we'll be able to showcase even in what we have done with IFAD is, and in this project, that we've been able to leverage with partners who are able to now tap into these locations or these areas that we are not really available in terms of branch networks and physical branch networks, to be specific. And in mid-2022, the bank with its partners together with IFAD, FFR, began the design of the Affordable Remittances and Financial Inclusion for Rural Families in Kenya project. And this is in line with our vision, which you're able to see, and our mission, which our vision is to be the most respected financial institution in our target market. And also our mission is to transform the financial industry landscape through innovation and relevant financial solutions. So this is one of the things that, just to be able to give a context, is that one of the strategies and the pillars of Credit Bank is to be a digital attacker, but also to drive sustainable financial services, which the remittance to rural areas and especially to the underbanked or unbanked, which women and the youth are also part of it. We've been able to partner with IFAD. So this fits right to what we are focused on. Next slide, please. So just to be able to go into the project is to be able to look at what were the key objectives of the project when we were going into it. And we have 4 objectives that we were looking at. to be able to make the impact that we need to be able to do and to align with IFAD, FFR, and also our mandate as a bank and what we are trying to push in terms of our mission and vision. So the first one we looked at was to enable affordable and formal digital remittances flows in Kenya to Germany to Kenya, Uganda to Kenya, and third country corridors, benefiting both rural and non-rural customers. So I'll just be able to give a brief highlights on these objectives and what we've been able to achieve on this, and then we'll be able to go to one specific one that we feel that for this session and this webinar we wanted to keenly focus on. And one of the things is, we know that primarily in Africa, what has been the biggest thing has been the physical cash pickup, whereby somebody actually moves from their location to go to a specific location and they're able to do a cash pickup and access remittance. What this has happened is that the overheads of achieving the same, especially to the financial institution, then they have to be met by the customer, and also that drives the cost for the cost of transaction. And the other aspect is your movement from your location to another location in terms of time and in terms of maybe sometimes you'll have to pay for the transport and such, and the inconvenience of that. Then there's a cost for that. So what we are looking at is how then can we make it convenient. By making us convenient, even the opportunity cost of that time, then it reduces. The cost of maybe the transport reduces. And then leveraging on digital solutions, then how can we be able to reduce the cost, and especially the overhead costs of meeting this, having somebody looking at and doing due diligence. Can the system be able to do this? Can we automate the process of actually doing that? The cost of paper when you're actually now transacting and all of those things, the overhead costs that actually drive the business, the price and the cost of remittance, can we be able to reduce it? The second one is enable unbanked rural remittance receivers financial inclusion through a basic and transparent bank account. So we know that in Africa, primarily we serve, and in the rural areas, either we get unbanked customers or underbanked customers in terms of financial inclusion and financial services access. So then how then can we be able to put into this project whereby if we have a recipient, they are able to be formally included through an account or through other means in terms of accessing other financial services, which is insurance, investments, savings, and so on, cards, and so on. So that is the other thing that we will focus on. We were focusing on in terms of the project. The third one is improve remittance accessibility and financial literacy of SACCO members, especially in rural and peri-urban areas. So with this, we were not just focusing on credit bank and the customers who are coming through credit bank. Then how then, as I said initially, we know that we only have a limited number in terms of our access and our locations. Then through partners and circles who are very key in rural financial inclusion because of their members, and their members being farmers, being the youth, and pushing community-based projects that circles usually push. So how then can we ensure that they are trained and they have knowledge in terms of financial services and financial access in terms of this? So that was also included as part of the objectives of the project. And fourth, we have the strengthening migrant access to financial services with a comprehensive solution, including remittances, savings, financial investment, and a housing solution. So also with the partnership that we wanted to do within Credit Bank and outside, this is with the circles and the partners that we are having, how then can we be able to support them in terms of creating a product for them that is specific for them? And also for Credit Bank, does our proposition or our product offering in terms of diaspora speak to the masses, speak to the diaspora, and speak also to the people who are receiving this money? Are they able to access? And that is now what we did in terms of looking at investment products that we can be able to now complement with our diaspora solutions, and looking for the same also for the circles. So that's
Daniel,
just a snapshot.
Yeah, Daniel, if you don't mind to conclude and focusing on what you have been doing to onboard working remittance customers, and you have 3 minutes to finalize this. Thanks.
Thank you. So with getting to know the objectives, all the objectives, then we can move to the next slide. So this slide specifically speaks to one key area. And this one key area that we wanted to focus on is from the objectives, you realize that we were speaking to also having opening accounts and being included. So one of the things that Credit Bank was able to do, which is also one of the key stories, success stories, is from the project, there was a target of 1,500 within the project. And within the project, we've been able to achieve 96% of this, whereby we've seen that we've been able to open 1,440 accounts for a specific product, which is called CBU Dream. So what this means is that from one of the activities whereby customers were actually walking in, the recipients, the receivers of remittances, they were walking in and we were able to convert them to account holders. So including them into the ecosystem, the financial ecosystem, these are non-credit bank account holders. But because they were walking in and doing a cash pickup, we were able to also sell for them their accounts and they were able to be onboarded. The account that we were specifically giving them for this was it's called a Credit Bank CBU Dream account, which is a current account that earns interest and currently earns an interest of 4% per annum. And this was an attractive rate for them, even compared to what is being offered right now in the market, that they were able to get in and they were able to be given all the facilities that are there. That's the debit card. They were able to be given a checkbook. They were able to be given free access to e-statements and alerts and all of those things. So we were able to complement the remittance solution with a product that we feel that will be interesting to and attractive to these recipients. And from that, we're able to get also 43% of the account opens to be belonging to women. And in terms of that, we've been able to give interest. The product also is interest earning to customers who have a balance of more than 150. From this 1,440, the average saving that they've been able to mobilize within the first month is actually 156 USD, which means they qualify for the 4%. Virtually all of them actually qualify for the 4% of this. Just to be able to, because of the interest of time, what has worked? So one of the things that worked for us to be able to achieve these numbers is to create awareness. So awareness we created in two fronts, both internally and also externally. Internally to staff in terms of telling them about this solution that they can be able to offer, how they can be able to offer. We also did awareness training in terms of cross-selling of the same, and we are able to also have communications to them through emails and to be able to also do a communication whereby if somebody is able to convert more customers, we are able to showcase this in the staff email group for them to be able to do. For the customers, we were able to do also cross-selling when they're there to be able to explain to them the product. We're able to do brochures to create awareness to them as well. One of the things that also is coupled with the data mining, we are able to see that if our customers have ever come, if these customers have ever come to our branches and we have their contacts, but they don't have accounts with us, we're able to call them and SMS them. So this also ensured that they're actually opening accounts once we were able able to tell them about the benefits. The other thing, as I've mentioned, is cross-selling the product. That one I think I've mentioned. Data mining in terms of also looking at the people who have transacted within the bank, they don't have accounts, and then calling them, sending them SMSs, sending them emails, and actually having one-on-one with them on this. And also the other aspect that has worked convert somebody who has transacted and to open an account. Then, and the account is funded up to a certain amount, then we are able to give them a percentage of how much that has been, the account has been funded, in terms of if the funding has been for a period of around like three months, then we're able to give them that. In terms
Daniel,
of the
to
customer,
conclude,
we are
30
also to give
seconds,
them a
thanks.
cashback. Yes, so we'll be able to give them a cashback as well in terms of how much they have funded. So if they fund up to a certain amount, we're able to give them a cashback, a certain percentage of the same. And I think for me, that has worked, and for Credit Bank, and we are happy that we've been able to achieve the 96%, and maybe hopefully by the end of the project, we'll have been able to achieve even more. So that concludes my presentation.
Thank
and
you.
The case study.
Thank you, Daniel, and apologies to keep the time, but we are many today to present things. Just a follow-up question for you to be ready for the Q&A. We wish to know if Credit Bank has planned to extend the remittance working activation beyond the ongoing project, and also if there is any plan to develop a women-related proposition further. I saw a lot of questions coming in. I'm very happy. As mentioned, this is supposed to be an interactive session, so we might extend the duration of the webinar maybe of a few minutes. But in any case, we are taking notes, and we will reply to you, in a written form in case we won't be able to address all the information. Before handing over to my colleagues, Ankita Andu, who is running the IDFR campaign at the FFR. I wish to invite Viola or Clara also to put the link for the NRSN, the National Remittance Stakeholder Network, Kenya and Uganda, the two platforms that are hosting this COP, this community of practice, for those that wish to know more about the work that we are doing in these two countries. So you can have a better understanding, and you can definitely be part of the future conversation. So without further ado, I pass the floor to Ankita to present the IDFR campaign, which somehow is connected with the topic we are discussing today. Ankita, over to you. Thanks.
Thank you, David. Good afternoon, everyone. It's an absolute pleasure to be part of this webinar. I am Ankita. I work as a communication specialist at the Financing Facility for Remittances, and today I will be talking to you about the International Day of Family Remittances. I think many of you have heard of the day before and have also celebrated, but today I'll just take a brief moment to talk about the day and also about the upcoming IDFR 2025 campaign. I'll share my screen. Okay. So just to give you a brief history about the IDFR, the idea of having a day that marked for the migrants and their families was originally conceived at a global forum in 2012, when it was realized that these flows remained constant through the crises that had preceded, whether they were political or economic. It was realized that migrants continued to send money to their loved ones despite all the odds, and helping families meet their daily needs of housing, health, education. And as we say, these funds help families achieve their own SDGs. After the conception of the International Day, it was taken to the IFAD Governing Council, where it was adopted in 2015. And then later in 2018, it was adopted by the UN General Assembly unanimously. Since then, every year on June 16th, we observe the IDFR, recognizing the importance of the contribution of over 200 million migrants who send money to over 800 million family members. And while these sums are sent in small amounts, as you're aware, $100, $200 at a time, When combined, these figures run into billions. And last year, remittances sent to LMICs crossed over $640 billion and more than $100 billion in Africa itself. And if you see the last decade trend, over $5 trillion have been sent to LMICs. And by 2030, we are projecting that almost $4.4 trillion will be sent to LMICs. And over a third of these flows go to rural areas where we know that 80% of the world's poor live. They face several crises related to food shortages, climate. And so these funds are then critical for us to understand their importance and how they can also finance not just at the rural level, but also at a national level, affecting economies. So after the adoption of the IDFR by the UN General Assembly under the aegis of the UN, a 10-year family campaign for 2020 to 2030 was conceived. The main purpose was to support 1 billion people reach their own SDGs, because stats reveal that 1 out of every 8 person is involved with remittances, either as a receiver or as a sender. So IFAD, as a custodian of the IDFR and within the framework of the Remittance 2030 campaign, organizes annual or biannual thematic topical campaigns. The campaign for 2025 is called Remittances Financing Development. This campaign aligns with the upcoming fourth international conference on financing for development in Sevilla on 3rd of July. Again, the aim is to maximize the full potential of remittances and diaspora investments to finance the gap for development, which is growing. If you see on the screen, it says almost 4 trillion additional dollars would be needed for developing countries to achieve their sustainable development goals. And that is the reason why we talk about remittances as a very crucial and important source of funding that can help achieve these goals. Because A, we know that remittances are a reliable and a direct source of funding at the household level. Not only does it cover your primary needs, but it is also estimated that almost up to a quarter of these funds support long-term goals and income-generating activities, including savings, investments. Then we also know that if we can, enhance financial inclusion and give more, have it more gender inclusive and have reach out to the last mile, expanding access to remittances and financial linked services also have the potential of having these funds contribute towards the economic development. And finally, we also talk about the migrants and diaspora, and we know that they contribute through direct investments, through skill transfer. And if we can increase the appetite and the ability of diaspora to invest, particularly in countries and regions that face challenges to mobilize these capital, it would become a source, a transformative source of change over the years. And I think that is what we are trying to emphasize through the campaign. So on June 16th, every year, and the IDFR campaign this year, we recognize the contributions that are made by migrants in achieving the sustainable goals. We recognize the efforts by all stakeholders who are involved in achieving SDG 10C, which is making remittances cheaper, accessible, affordable. We also recognize the importance of an enabling environment, and we reach out to policymakers, regulators for this to maximize the potential of remittances and diaspora investments. We know, and we've learned through this webinar as well, that there are many good global practices related to digitalization, financial inclusion, and gender, and we would like to know more about it. And lastly, we continue to foster partnerships and to unlock the full potential of remittances and making them count. over the years, after the adoption of the IDFR, the day itself and the campaign has garnered immense support, not only from partners like you, but also from the wider audiences. There are some numbers on the screen. We have over 8,000 banks who have endorsed the day, over 40 plus endorsements from government head, principals of UN agencies, CEOs from private sector and civil society. So, and every year the campaign receives a very good response for our social media campaign and our web collaterals. So, how do you support and promote the IDFR? There are many ways of doing it, but we look forward to hearing from you the good practices that you have, the innovations, the lessons, and then we can share it through our networks. I'll also share the slide in a little more detail. You can send us a video statement, a written statement, and you can organize events. And as I said, this year's campaign is focusing on how remittances can contribute to financing development. If you have any interesting ways of spreading the message, if you have any interesting ideas, you can organize events, you can have campaigns, you can do a blog, press release, web articles, and all of this will be shared on our socials, on our web platforms, and you can always write to us at remittances@ifad.org. And here are the links to our social media. You can connect with us on X at FF Remittances and at IFAD. Please use hashtags of family remittances, SDGs, sending money home. We will get these on our screens, and then we will be able to repost them. Similarly, for LinkedIn, you can find us on Financing Facility for Remittances. I believe a lot of you are already part of the NRSN, so you would be aware of this. And lastly, we have the IDFR Trello for 2025. The IDFR Trello board is a place where you will find all visual and written collateral for the IDFR. So whether it is banners, logos, social media cards, graphic, anything that you require for you to promote the day, you will find it on the Trello. And as I said, please, we would love to hear from you. Send us your stories and do endorse the day. You can send it to us as a short video by a principal, a 1 or 2 minute, because we always socialize them. You can send us a written statement on your letterhead. We have a separate page on the website where we have all the past endorsements. You can go have a look and please send it to us. And last, if you go on the Family Remittance website, we have a Get Involved page. On that page, you will find all details that you require to make a campaign, to support us. Any other information that you need is available here, past endorsements, past editions. So thank you very much. I hope I've stayed to the time limit, and we look forward to hearing from you. If there's any way we can support you, the FFR team, including me and David, would be happy to assist. And thank you so much for your time, everyone. Thank you.
Thank you.
Over to
Thank
you,
you,
David.
Ankita. Amazing. Thank you so much to have been able to channel a lot of information in the given time. Absolutely. Just reassurance to all the attendees that are asking for the presentation. We'll be sharing the presentation, we'll be sharing the recording, we'll be sharing also the answers to so many questions that you dropped. We are amazed to have received so many questions. So for interest of time, I think we can take one question for each panelist, and the other one will be responded by email by the end of the week. So let me start with Anastasia. If you can answer to the question made by Sonia regarding the return, it would be great. For Jumuke, if you would be able to respond to the question regarding the financial literacy experience for women, especially in the rural areas, and how to, leverage, the access and the usage. And for Daniel, what is the most important, let's say, drivers to decide to invest on women product development? So I would say we can start with these three, and we'll follow up with the rest. So I also invite the the attendees to share any other question. We will be sure to answer to you by the end of the week. So let's start with Anastasia, 1 minute each. Max, thank you.
Super. Thanks, David, and thanks, Sonia, for your question regarding how we generate returns and will the companies pay us back? So to clarify, the source of our funding for the ILF for GIF is development agencies. Specifically, we are funded by the Swiss Development Corporation and the Austrian Development Agency. So our funding is mostly majorly focuses on impact, and that is why we tie it to specific impact KPIs. So we do not expect any financial returns. Therefore, unlike typical grants where they're paid upfront, here we pay after the specific KPIs have been met. And however, we expect the companies to have market-driven models because we hope that through the outcome-based grants, they're able to attract external additional capital that can sustain them financially. So we're able to scale both financially and the impact of these enterprises.
Super. Maybe just an add-on. I mean, do you request co-finance for the grantee?
Yes. So for us to also be able to issue this outcome-based grant, we usually require the company to be able to raise external capital as well from other partners, and it has to be repayable capital. So that is why we focus. We try to look at companies that can be able to leverage such kind of capital. So our funding is catalytic, and then you raise additional capital like debts or grants to be able to match our outcome-based grants.
Okay, there is a clear commitment to be shown to get your support. Okay, let's move to Jumuke. I mean, let me also maybe read the question for the interest of all. I mean, from Millicent, how are you ensuring that women, especially in rural areas, have equal access to financial literacy programs? How effective these have been, and also how do you keep product pricing affordable to encourage usage and adoption? Is a multiple question, but if you can try to answer in 1 minute would be fantastic. Thank you.
Thank you, David. So for financial literacy programs across rural areas, what we usually say is to leverage on their existing networks. So the only way they are able to adapt it is if we integrate into what they are comfortable with. Their local communities, their market women associations, most of them either belong to either a SACCO or a VSLA. So incorporate the materials into those communities. Then the material developed should speak to their specific use cases, something that directly impacts them. So if you are speaking and in the languages that they understand, so it has to be, for instance, a woman that owns a rice mill. Anything we want to discuss has to revolve around our current way of life. Who does she take advice from? Like when I presented my deck, I spoke about the user persona. So when you understand who they are, you can then meet them at that point. The next question was access to credit. Yes. So in terms of credit and for these women, it's no doubt that it has been established. Studies have shown that women are better borrowers and their default rates are lower. In terms of pricing, it's usually very dependent on the financial service provider involved and the funder backing that FSP, because cost of funds differ from partner to partner. But what we do and what we help them to do is process improvement to ensure that more women are able to get into the funnel, and the eligibility criteria is such a way that is not gender biased, and they're giving an opportunity to be able to access this credit and improve their business, so to say. I hope that answers the question. Did I miss anyone, David?
Thank you. No, thank you so much, Jumuke. And as mentioned, we will definitely follow up with other question to share other views and other information that each panelist and organization might have. for following up with attendees, since this is also the aim of the discussion to to link with other practitioners in the arena, and also to get acquainted with the practice. Daniel, over to you for the question made by Astrid regarding what is the most compelling drivers to to convince the bank to invest on this particular topic. Over, and you have also 1 minute. Thanks.
Okay, thank you. So, thank you, Astrid. I think other than what you've mentioned, the return. So, for I think for a bank, it is just there are two things that primarily we look at in terms of the revenue, which is the return. However, we also look at in terms of our banking activities. Do we have security? Because we manage funds on behalf of the depositors, and we are able to then, based on these funds, we are able to generate returns for them. And this return means you're investing, you're lending, you're creating an impact to be able to look at this return. So looking at the persona of a male or a man and a woman, then we are looking at the woman being more secure, and we have data to be able to show that there is more security with a woman in terms of lending to them. They will be able to return the same in terms of saving. They save more in even in terms of whatever they have, just to be able to ensure that there's the family itself is secure. So for a woman, it's studies have proved that they are more secure in terms of paying loans and also in terms of their savings. So it makes sense to be able to look at them. The other aspect is that predominantly the woman has been underbanked or unbanked, and this especially in Africa. And studies have shown, and even we know in Africa, whereby the man was the dominant person in terms of managing finances, in terms of deciding on these finances, even if it's the woman who's earning. So because of this, then we are able to see if we're able to include them into the ecosystem, then we'll be more secure in our banking activities, and also in terms of lending to them, and also for them to be able to save in. So creating that impact, including them in the financial ecosystem. So promoting financial inclusion. So that's another aspect of us promoting them. And also, if they are better managers of funds, these are funds that the bank can be able to front them, or they can be able to give funds to the bank, then it makes more sense to actually develop products which are geared to them, to be able to support them, and also in return support the bank. And all this then leads to the security and the returns for a bank. So that's the business case that for us as banks we are looking at also. So back to you, David.
Thank you. Thank you so much, Daniel. I wish just to try to answer to some of the questions that I may be in position to respond quickly, and then we conclude the session. Basically, there was a question regarding the cost, and from our perspective, this is also part of our scope, but we do know that there are a number of elements that influence the cost setup. So definitely, have more granular data, support the competition, especially in the corridors which have less traffic, and also having a regulatory framework which is fostering innovation might be definitely, a good mix to see cost reduction. But beyond cost, I think, as it's been explained today, I think what it would be important is also to expand the usage and the access and the usage of remittance users, since this can be an entry point for them to be financially included at large. While moving to the other question regarding the percentage of remittances terminated in the rural areas, from data that we collected along the years, we did see that on average, we're talking about 1/3 of remittance volume terminated into rural areas, despite the fact that it's pretty challenging to have accurate data. But we are working on this end as well. So hopefully we'll make we'll share more information in the coming month. So we reached to an end. So before closing the call, let me thank all the fellow panelists and the colleagues connected from Kenya, Uganda, Nigeria, and globally for participating in this today's session. Has been amazing to see the level of interactivity. As mentioned, we'll share the recording, the presentations, and also we'll respond to the answers. I really hope that the session has been valuable and inspiring for you, for your action towards enhancing your financial inclusion proposition linked to remittances, household, and women. There is a lot of to be done, and we'll hope to have another session in the few months' time to showcase additional practice. Today we showcase practice on the receiving hand. We are also keen to collect additional information on the sending hand. You will receive after the session a survey where you can also include any practice that you have been practicing or have been witnessing on the sending side for additional knowledge sharing purposes. Before concluding, allow me also to promote another webinar that the FFR is hosting tomorrow. Is about data, as mentioned earlier. We will talk about the Remitscope, the one-stop platform that we launched a few months back, which will give you a place where get all the information regarding a specific country or corridor and the like. The webinar will be happening tomorrow afternoon. I believe it's 3 p.m. GMT time. But yeah, this is the.
Allow me to, sorry, David, allow me to correct, 2 p.m. GMT time.
Okay, 2 p.m. GM time, but we'll also be sharing the link with you just after the conclusion of the webinar. And yeah, regarding the survey, please, it would be valuable to collect your feedback on the survey that will be circulating just after the end of this call to improve and enhance our discussion for the coming month. With said that, thank you again, everyone, and I wish you a fantastic rest of the day. Thank you. Bye.